Hello everyone, welcome back to Smart Investing with Philippe, and this is the time again for the market update, so stay tuned until the end of this video. We're gonna review the market of today, and this has been again a very good day, and I believe that we are just at the start of another bull run until the end of this year. So if you really believe that the market is going to come back down like we saw in April, then I invite you to look at history. Never the market goes down minus 20% 2 times in a year. That's mean 20% V-shape, another 20%. It never happened. Doesn't mean it cannot happen. Everything can happen. But the probability for this to happen is very close to zero. And again, investment is not about 100% certainty or probability. We deal with likelihood and decent probability and decent odds to win a trade over the short, medium term, or the long term. So let's go into it. Let's look at the market. This is QQQ. Very good day today, almost close to 1%. You can see we are very, very close to all-time high. I mean, just a couple of percentage and we're back to all-time high. You see 2.5%, we're back to all-time high. So is the market going to go to all-time high, then break out? Or is it going to retrace back, gap fill, and then go back to all-time high? Just the future will tell us, but I believe that it could be that we will go to all-time high first, and then we probably will retrace back. Maybe go to gap fill again. So that means we're going to go back to 490. And after that, we go and we have a total breakout to all-time high and well above all-time high. But if you really think that we're going to go back to the level of 400, like we saw in April, then I think you must be killing yourself. S&P 500, same thing, very close to all-time high. Maybe we're gonna go to all-time high, then we trace back, gap fill, and then go back and break out definitely from new highs. RSI still elevated. QQQ the same, RSI still very elevated. So what has been a surprise today is IWM, small cap, the most frustrated position in the stock market, in the US stock market today. I mean, look at that, you know, these things has not made any money since 2022. Crazy. And you see we are at a very critical and pivotal level, which is the level of 210. And 210 is the high of the channel that has been trading for quite some time. And if we break that resistance of 210, then maybe we go to the point of pivot of 222 and maybe go back to a all-time high. But QQQ is highly dependent of the rate change of the Fed. So I don't know why today it has dramatically increased by 1.6%, but this is very welcome indeed. Then you can see we go back to Max 7. If we go back to Max 7, today the market has been relatively flat, 0.25% up. Most of the Max 7 down, except NVIDIA going back to 140, Tesla slightly up, and Apple slightly up as well. You see Apple, this darling of the market, is still down close to 20% from all-time high. Let's see. Yeah, 20% down from all-time high. So if you want pick Apple on the cheap, this is your time. This is your time. Once all the China trade deal and discussion will be over, Apple will fly again, and that will be too late to get it at a discount of 20%. So I don't like personally Apple. I think there are better investment than Apple, but if you want a safe play at a very good discount, then maybe Apple is your candidate. If you look at the VIX has been coming down by 3.5%. Now we are back to very, very decent level And this is very, very good because that really means that volatility is back to close to normal level. I think it should go back to the 16. So that means another 1 or 2 or 3% down. Another 10% down, sorry. And then we're back to the fairly average limit that we've seen in 2024 and 2025. Other than that, we see that the rate, you see TLT rate are still going up, which is funny because rates are going up and IWM is going up, which is very unusual, you know, but never mind. Could be that because people are seeing too much discount on the small cap and they want to pick up some shares before they break out if the Fed start to decrease rate. And you're going to see that the likelihood for the Fed to decrease rate is very, very low. The market is not pricing any decrease in rate. You see, we're still very close to the 5% marks on the 20 and 30 years and 4.5% on the 10 years. I mean, you saw that the job market on the economic front, we got some very good data today. You see job openings of 7.39 million, slightly above the 7.1 million, and job quits of 3,019,000, well below the 3,034,000 of the previous numbers. So the job market is picking up despite the trade talk, despite the rate being high, and despite the inflation being under control. So you see, what is the incentive for the Fed to decrease rate in those conditions? I think, personally, I think they should decrease rate by 25 basis points because there is enough room for the market to absorb that decrease in rate, and that should support the equity market and the small cap and also the home buyers going forward. But the long dated rate is very, very high at the moment, you know. Otherwise, tomorrow we should have some job data again. Continuous jobless claim, initial jobless claim. These are very important data, you know. And again, on Friday, we get also some job data that is going to strengthen our view about the employment market in the US. But all should be okay, you know. AMD still continuing its way up. Now they were close to 170. So Palantir managed to break out, but seems to be on the higher band of the Bollinger Band. So we don't know if it's going to retrace back to 110. But these stocks, I don't like to touch it. Too expensive for me. I know a lot of people like it. A lot of people think this is the seventh wonder of the world and it's going to go to millions and whatsoever. Maybe, you know, sometime, you know, the market is irrational and then they make huge valuation on this type of company because there is a huge fan base. But this is not the type of stock I'm buying. So SMCI is more the type of stock I would like to buy. Very low PE, good growth potential. Still trading below the 50 point. But you see, we are fairly recovered from the 30 marks. Almost 50% recovery. Bitcoin going, managed to break out from all-time high, then retrace back to the all-time high, at least the previous all-time high. So, or it will retrace back down to the 200 moving average, which is the 96,000, or then it's going to break out definitely. And we're going to see it just rising and rising. Euro is weakening, the dollar is appreciating, but overall the dollar is still very, very weak compared to the euro. And that's impacting a foreign investor like me who is based in Europe. That means my overall US dollar portfolio has decreased a lot because of the exchange rate. Because you can see beginning of 2025 was 1.02 and now we are close to 10% higher. So you see, I have lost 10% on my US dollar investment only because of exchange rate. Other than that, we can see the headlines, the market headlines. Stock gain on US job surprise as Treasury fall. I don't understand why they say Treasury is falling. Ah, yeah, for sure. Treasury is falling. That means the rate is increasing, which is very counterintuitive, because if Treasury is falling, a rate increase, normally the stock shouldn't go so high. But I think the market has been very bullish because of the US job data, and they will continue to do so, you know. Now the question is that, will the market be bullish for the whole summertime, or they are going to just be bullish for the months of June, and then for July and August, because everybody goes on holiday, then it's going to trade sideways, then the usual September collapse or retracement, and then the end of the year, for the last quarter, we're going to go back to the 6,600 marks that Tom Lee was talking about in his previous video. We will see. There's still a lot of talk with the tariffs, still a lot of talk with the big, beautiful tax bill. All of this is still feeding the market narrative. And you see, despite all of this uncertainty, the market is still going up and up and up and up and up. So it seems like there is a lot of fuel for the market to go higher. Overall, very good day. The market continues its way up, and I think it's still going to go creep up bit by bit every single day, every single week. And we're going to see the market go up and go up and go up. I don't see any catalyst for the market to retrace or to go down significantly. And a lot of investors, by the end of the year, they're going to play catch up, you know. A lot of these fund managers who saw that went to defensive sector in the low of April, because they were thinking they were so genius, they were predicting the market going to Armageddon or to low level or whatever, this nightmare. They were all very surprised by the V-shape and the fast recovery of this market. And I think there will be a lot of people playing catch up. So thanks so much for watching this video. Subscribe, like, and leave a comment. Please tell me what you think where the market is going by the end of the year, or maybe in June. Do you think the market will go up, go down, or go trade sideways? Thanks so much. Bye.